Hey guys, welcome back to Viraj. Today we're going to be discussing the topic of habits which you can put in place, safeguards which you can put in place to ensure that you get the returns which you deserve from investing. And a lot of the time, what you see is that investors have great investments which they've made and they have wonderful portfolios, very diversified. They've taken account of all the financial information and everything there is to take account of. But what ends up being the downfall for most people is that they don't know how to sit quietly in a room for an hour. That is what is our biggest flaw as human beings, and that leads us, believe it or not, to have worse returns. And this reminds me of a chapter from Intelligent Investor, which my uncle and I discussed about a few years back, and we keep coming back to this topic because it's a very truth of life. And the chapter basically talks about how if your investment returns depends on how much you trade in a year. What does that mean? So your investment returns, if you just bought and left it, as Warren Buffett and my other uncles say, is that it would have been the complete return which you see when you track the price and you put the cursors on two different places. You would have captured 100% of whatever returns you were given or were supposed to have. And when you start trading, what ends up happening is there are a few things that happen. One, you start losing money in terms of your churning fees and your costs. So every time you make a trade, what ends up happening is that there's a cost of your trade amount which goes into the brokerage firm and the NSE. So what ends up happening is that every time you make a small trade of your portfolio, you end up losing a chunk of it, and that's not something which is very desirable. And that ends up happening when you decide to enter, exit, and you keep wavering. So these are some of the downfalls which happen when you are unable to keep your hands tied when you're trying to invest. So there are some ways where you can overcome this. One way which you can overcome this is by not having access to your login details. This is something which some people are not comfortable with, but this is something all three of us to some extent do enact, where we don't even place our own trades. We just call a trusted broker, and we have a so what you need for this is someone you trust, and this can be a broker, a person who you've been trading with for a long time, and you can call up that person and tell them that I'll just give you my orders, you buy instead of me, and I don't want to look at my financial portfolio. And this is something my older uncle enforces a lot. He doesn't, not a day does comes when he looks at his portfolio. He doesn't even know what's there in his portfolio a lot of the time. Every once a year, his broker will call him and tell him, sir, this is your portfolio, and he'll say, oh, is that so? And he doesn't like selling stocks, so that's not something he's interested in. So what ends up happening is he gets an update on his portfolio every 6 months or once a year maybe, and it's either us who log in and have to check it for him, because yeah, so we check it for him, or his broker calls him up and tells him without him asking. This is one way where you can ensure that you don't look at your portfolio going up and down and you decide to sell or buy any given day. Second, something else which you can enact is the idea that you have an incentive system. Every few weeks you go without being able to look at your portfolio, you can reward yourself with something. This is something you can take from the book Atomic Habits by James Clear, where he says that you need a way of reducing friction for your good habits, and you need a way of incentivizing your good habits. So every time, or the opposite can also be true, where you disincentivize your bad habits. So every time you check your portfolio, you tell your partner, your spouse, or your children that I will give you this much X amount of rupees every time I check my portfolio. And this is a way of keeping yourself accountable. And your partner and your family members will keep you accountable to this extent. All these ways basically ensure that you don't keep checking your portfolio and lose money just in terms of trading. And you stand to lose a lot of the investment returns. And sometimes you even end up losing money due to these trades. What do you think about that?
I absolutely agree. There's two things what Sashwath said, which you can break it down into. One is slow down. Important thing in this is to slow it down. In this day and age, every single thing which we do nowadays seems to be on a speed. That's why if you see the latest trend on YouTube and everywhere else, is film photography. People are going back to old school, they're saying, where they're taking film, loading it on old film cameras, taking 36 shots in a canister. After that, getting it developed. After it's developed, scanning it, then seeing the photos. What is the whole thing? A lot of people think they're crazy. these photographers who are doing it, like Peter McKinnon and everybody. Why are they doing this? The reason why they're doing it is because digital photography has reached a point where it's so fast, so much of photographs and so much of media is given through you, you can't even enjoy it anymore. You can't even consume it. The art of photography is lost. The whole thing of setting up a photograph, composing an image is gone because you can click, 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 just review, edit, edit, use AI to edit. You don't even have to go and take the photographs anymore thanks to AI now. So it's destroyed it. Same way is true with investing. There's an art to investing. Investing is about taking your time. It's like taking time to make the cup of coffee or to make the cup of tea. They're like the Japanese tea ceremony. Same way, good investing is about enjoying the process of investing. Warren Buffett doesn't care about the money he makes. What he cares about is how he makes the money and watching his money grow. So this is something to really to think about. When you invest, take the time to invest. Slow it down. The reasons why we say put in these hurdles is most people the biggest enemy they have is themselves. Why you fail to achieve anything you set out to achieve is not because you don't fail to make a plan or because you don't have the equipment or you don't have the money. It is because you just don't take the time to do it. So by slowing the process down, like what Shashwat said, keeping it like going old school, instead of logging on to buy your shares, you call up your broker and tell your broker, hey, today if you reach this price on ITC, buy me 10 shares.
Yeah.
If you reach this prices on Infosys, this is my target price. If it reaches it, buy me 10 shares. Do it like that. Simple reason is once you place your orders, you forget about it. End of the day, the broker will call you back and say, sir, yes, we managed to get you a price, or sir, today it did not happen. Okay, you move on. Next day or next month, whatever your target is, you slow it down. This is a very important thing to do with what Shashwat is saying. The second thing is rewarding good behavior, and bad behavior, you punish it.
Yes.
Yeah. Bad behavior punishing could be like what Shashwat said. You tell your spouse or your son or your daughter, I'm going to give you money every time I do something bad. Or you can be even severe. Like what would be really upsetting to Anand would be every time Anand does something wrong, I say I'm going to give money to his BJP friends. That would really upset him. Because that way you'll always be on guard to prevent yourself. Because if I do this, if I fail to live up to my own rules, I'm going to be doing something which I hate doing. So this could be very effective tool in all kinds of habit forming. Same way, the reverse is also true if you reward yourself. If I manage today to not to log on to my portfolio management, or if I manage to go and do my exercise today, whatever it is, you set yourself as a task and you manage to do, and you give yourself a reward. It's great. That's why a lot of people don't like saying cheat meal when you're doing exercise. You've been on a good diet the entire week, you get one reward at the end of the week. You don't call it a cheat meal. You're not cheating yourself. You worked hard for that reward. Rock Dwayne Johnson says it on his media too. Instead of a cheat meal, call it a reward meal. Call it something that you're patting yourself on the back for being an achiever, being the hardest worker in the room. So it's true. Same way as it leads to investing. When you are the hardest working guy in the room, you're making your money work that much harder for you. As the song goes, work hard, play hard, enjoy your rewards. You work very hard for those investments. You work very hard for that growth. So when you get an opportunity to celebrate it, do celebrate it. So you feel good that you're doing all this. So it reinforces that habit of slowing down, reinforces the habit of doing good investment and not trading. The reason why we say avoid trading is it's like trying to, you've seen in a lot of showrooms where they have a very powerful AC trying to cool the showroom down, but the windows and the doors will be opened and shut so many times the room never gets cooled down. The AC is working overtime, but now everyone's wondering why isn't this room cooling down? Because you keep opening and closing the door so often. That is an analogy to trading. You're trying to build up an investment. You're trying to build up, some kind of returns. But you keep on going in and out of the market. All your overheads keep on cutting, in all your profits. You're actually thinking making a spread of 2%, 3% just looking at the price, but you're not. Because of all the costs in hidden costs which are chopping all your returns, there's nothing left for you to take home. So keep this in mind. What Shashwat said is very true. These are small things you can do to effectively guard yourself against yourself from losing the returns which you deserve. End of the day, it's all about the returns. And if you don't get them, what's the fun doing what we're doing? This is what I have to add to what Shashwat was saying.
Yeah, and you don't lose anything by not checking the price 24/7. And by calling your broker, you don't even have to give him a price. You can say buy it at whatever price it's trading at, because honestly, over the next 10 years, it does not make a difference. You buy it 2 rupees more, 10 rupees more, even 20 rupees more, doesn't make a huge difference over the period of 10, 20 years, which should be your investment horizon. So your short-term fluctuations don't matter much. You aren't gaining or losing much by being the first one at the door, and it's impossible for you to be the first one at the door anyway. So why bother trying? Might as well look at the tried and tested method of Warren Buffett, Charlie Munger, and Peter Lynch, all of these great investors, and you focus on what matters more, the fundamentals, the things that matter more are the numbers, and you look at these and the investment takes care of itself. You don't have to be the first one at the door. You can be the last one at the door and still make a lot of money.
And remember, you are investing in a company, you're believing in their business. You're not making horse trades, you're not doing bets, you're not playing poker. So if you've done your research, you've done your due diligence, and you've placed your bet, and you've bought the share, you've invested in this company, forget about it. What are you going to do? Log on every day, and let's say it's gone down by 5 rupees, it's gone down by 2 rupees. And if that's making you nervous, it's not the company or the market which is at fault, it is your own mind which is at fault. That means you did not do proper investigation, you did not do proper research.
Because you should have the conviction.
Correct. You should have the confidence.
Yeah.
That yes, don't worry. It's like being in an aircraft with turbulence. You have a little bit of turbulence, and if you're a honed-in flyer and you know about aircrafts and you've flown many times, you'll be like, hey, it's okay. A bit of turbulence is not the end of the world. Yes, make sure you're wearing a seatbelt. You're going to be fine. But if you're a first-time flyer, the first time you feel the plane shaking, you think you're going to crash.
Yeah.
You think, oh my god, oh my god, oh my god. You hold the grip and you're holding everybody and like, oh my god, oh my god. So if you've done your research and you know what you're doing, don't worry about it. If the price corrects by 2-3%, even 5%, it's okay. Maybe another opportunity to buy a few more shares.
Yeah.
If you've done your research properly. And will know when to sell, because you'll know, yes, these things, fundamentals of what of my research are changed. That means it's the time I exit this company.
Yeah.
You'll know that. Then you exit. But if you don't do any of that, what do you know by looking at the price going up and down, up and down? You know nothing. What do? Do you buy? Do you sell? You don't know. So don't do this. Don't do this to yourself, and it will drive you mad. And finally, end of it, you will not invest. You'll run away from the market saying, I can't do this.
It's too mentally taxing.
Too mentally taxing. It's very tiring.
You're doing yourself a favor by doing this.
Yes. And you'll only add, instead of calming yourself down, you'll only add more anxiety to your life, which is a terrible thing. If you're going to do that, you might as well just do SIP, like what Sashwath has said. SIP on the Nifty, bet on India, and forget about it.
Yes.
Don't do this to yourself. So I think I should allow Sashwath to conclude this video and sign us off.
So this was just a video as a public warning, because we felt that, or at least I've seen a lot of people very recently that too looking at their phones and constantly checking their portfolio. Very recently, I saw a person who checked their portfolio every 2 minutes. So that was something I was shocked by, and I thought that this would be a good video, because we've went through this as investors, and I'm sure you guys have gone through this and are maybe going through this as we are. So we thought that this would be something interesting. Anyway, we are going to be doing a Q&A, and we request that you guys leave comments in the comments section, and we'll do our best to answer each one of them. And we hope to see a lot of comments, because we get really encouraged by comments, and both positive and negative and constructive feedback. So please leave us comments, give us questions, and we'll do it every weekend. Please don't ask us stock specific questions, because we are not SEBI registered advisors, nor have we claimed to be, and we do not think that we will be able to give you the guidance which you need on specific stocks. But we definitely will love to chat with you on things which are more general towards finance and investment and even the economy. So please do leave us a comment. Please like and subscribe if you enjoyed the video. Please share it with your friends, and we'll see you in the next video. Thanks.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below, and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.